Good evening. It's Saturday, October 21st. My name is Dave Coker, and this is Talking About Finance. And hello there. Now, tonight I've got to cut short the intro. My band is playing. We just got home from the pub. We had dinner. We're going to hang around the house for a little while, then head out again shortly. So let's talk about finance. Boy, it was a brutal week for the S&P 500, down about 2.39%. Looking at Q3 earnings as well as global events, which are moving very quickly, stocks got hammered. Only two sectors moved up on the week, energy and staples. And meanwhile, 9 sectors finished down on the week, with real estate and discretionary spending coming in dead last, down 4.63% and 4.58% respectively. So it seems lots of bubbles are bursting at the same time. And as you guys have heard before, I've been negative about October. So what happens here, we have to be extremely careful. I do think we're going to see a lot of volatility before this month is gone. The VIX traded up to 21.71, opened the week at 19.33. Once again, the VIX is mean reverting. Its long run average is 20. And it has been below the long run average for a very long time. So watch out there, guys. October is shaping up to be one volatile month. The 10-year note closed the week at 4.91%, up 0.3% or 30 basis points on the week, and up a solid 100 basis points or 1% year to date. Huge moves in the fixed income market, which are significant and are impacting stocks. Oil closed the week at 88.28, up about 0.7% or 70 basis points on the week, and up about 10% year to date. And yesterday was Friday, so you know what I did. I bought Bitcoin, which is just what I do, what anyone can do around 4 o'clock in the morning on a Friday. What else are you going to do? Have some coffee, send some money from your bank account to the exchange, buy some Bitcoin, send the Bitcoin to your wallet, done. Enjoy your coffee. So, let's find out what me and my buddies, about 50 or so finance professionals from all around the planet, talked about last week. And once again, I do have to apologize. I'm a proper country boy, and I'm living in proper England, so double apologies. Let me properly introduce us. We are Global Wall Street. And between Telegram and our personal networks on LinkedIn and WhatsApp, we know everybody. We know absolutely everyone in global finance. And this week we're reporting from Wall Street. We're reporting from Canary Wharf in London. We're in Shanghai, we're reporting in Beijing, and we're also in Sao Paulo. We have people everywhere, absolutely everywhere, that matters and suits the dialogue of finance. So let's go. 7 slides for 7 days. Oh, and guys, once again, I'm having so much fun. I'm going to have to personally use my psycho powers to move the markets in your favor. So let's all get rich. Now, this is interesting because, as I mentioned before, we're seeing stock markets drop significantly. And as I've written before, and I mentioned in prior installments, we're seeing a lot of capital move into fixed income. And this is off some Bank of America research that somebody posted, I'm not sure who, in the channel. And we can see this is the longest that we've ever seen capital moving, a net capital infusion of money going into treasuries. Some 36 straight weeks. Absolutely incredible. All this money's moving in. And this is, of course, a 4-month moving average, the black line. And you can see these are not knee-jerk reactions. These are decidedly strong capital flows into treasuries. Put 2 and 2 together and figure out where the money's coming from. If you need to, check that first slide. We know retail is selling stocks and buying fixed income assets. And professional money, you ask? No, professional money ain't doing anything with equities. Professional money is staying out. We've got the data. And here's another driver. And this is off some research that I posted, that I delivered earlier in the week. I gave a presentation over at a bank I can't name, right? It's just the nature of the business. But yeah, the era of free money, which is at the bottom, totally distorted stuff. Oh my God, it created such a mess. And now we see the 3-month T-bill, very short-term instruments, trading at yields that we last saw some 22 years ago. Trouble, trouble, trouble everywhere. But still, if you're of that age and you're trying to figure out what you're going to do to retire, guys, start early. Yeah, you don't want to be in this situation. You really don't want to be in this situation. So whatever you can do, whenever you can do it, it will help. You do have to do some planning, whether it's retirement planning or even financial planning, either one. As long as you're planning, it doesn't really matter. Although this gentleman here, nice ink, I've got ink myself. I don't eat tacos, right? I used to eat soft shell tacos when I was in New York. The Mexican and just, it's not good here. I'm in England right now. I am not eating that strange food. But still, this gentleman might have to reprioritize a little bit. He's not going to be building wealth with that type of structure for his investments or for his money. I would expect to see half of the taco budget diverted first into investments. And that is maybe why wealthy people tend to stay wealthy. Well, you can do it too. Let's start at 11 o'clock and move clockwise. Invest money into assets. Yep, assets. Tangible, real, physical assets. Oh, as well as stock. Leverage debt. I don't like debt. If you want to rock and roll with debt, just be very, very careful. Check the financials daily. With me, I've got the watch programmed. I've got everything around me chirping and buzzing all the time. I don't even have to look at my financials. I just know from the sounds the devices are making. Bitcoin's up, Bitcoin's down, gold's up, gold's down. You sort of see how it's going. Down here at 5 o'clock, a financial plan and goals. You need a plan, guys. You ain't got no plan, you're in trouble. Multiple sources of income. I'm not going to name how many, I've got many. So besides my job teaching at the university and the research I sell investment banks and the dividends that I've got coming in the property business, there's other revenue streams. You need to have multiple streams of revenue. The young kids call it side hustles. I like that phrase. I'll call it a side hustle. I've got 7. If you've got one, a full-time job, you're in real trouble. Don't do that to yourself. And finally, most importantly, adapt and learn. I wrote an article for Medium today about how I lost $142,000 in the stock market. Did I cry? No, it's only money. My God, I made it all back since. That was right in the pandemic. But I learned from my mistake. I will not make that mistake again. And as I mentioned in the Medium article, I will make new mistakes, right? New and exciting mistakes, right? Actually, I hope I never make a mistake that exciting, but it could happen. And I know we've talked about this before, but somebody posted it to the channel, so I felt that I should bring it in. And we did spend a fair amount of time talking about it this week because it looks like Bitcoin's getting a little uppity. And people were talking about when they're going to sell. And me and a few other people were like, my God, why would you sell Bitcoin? Sure, your average price is about, I think that young lady, her average price was around $11,000. And she's itching to sell when it gets above 30. Why on earth would you sell? Right? If you sell, you got to pay taxes. If you sell, you miss any other possible upside. And Bitcoin has significant upside, guys. Bitcoin, the best is yet to come. So the first rule of Bitcoin, you never sell Bitcoin. And we've talked about Plan B's research before. Excellent guy, got a lot of time for Plan B. And you can take a look at what he's predicted. Now, he's been spot on with his stock to flow model. And really what he's doing here is he's looking at the price of Bitcoin and he's speccing out where we are in different cycles. He's got 4 different cycles. Accumulation, a bull market, a bear market, and liquidation. Now, liquidation's in red. Starting from the right-hand side, going left, you can see various periods of liquidation. Each period of liquidation was followed by a period of a bear market, or preceded, I should say, by a period of a bear market. And before the bear market came the bull market. And of course, before the bull market came a period of accumulation. Me, I'm somebody for a long, long time, since 2014, as I mentioned, I've been buying Bitcoin. I've been accumulating forever. Never sell Bitcoin, guys. You can do the same thing, just buy and hold, never sell. So accumulation for people like us is forever. But those days are coming again, guys, where we're going to see a bull market. Lots of speculation upon when, how profound, how it's going to happen, blah, blah, blah. I don't really get involved in that. I just know those days are coming again soon. And I'm buying Bitcoin at every opportunity. Once a week, I buy Bitcoin. You can do the same thing. You don't have to buy one Bitcoin each week. Whatever you can spend, 10 pounds, 100 pounds, 1,000 pounds, whatever. Just buy Bitcoin and never sell it. That's it, guys. Take care. You're going to have an awesome week. Going to make lots of money. Thanks for your time. Oh, come see us play tonight. We go on at 2 a.m. Rock and roll.